Hello, friends. Happy Thursday. Happy February 9. Let's hop into things. If I can talk, that'd be great. Let's see here, guys. Long story short, I'm pre-recording this, if I'm being completely honest. So I don't have the Thursday update, but rates have been pretty good. They've gone up a touch, but then sideways. So it's kind of like this typical one forward, two back. But all that's to say, here's what I want to bring up today. So I actually signed up for this. I haven't done anything yet. I just thought it was really interesting. So if you haven't heard of it, Arrived, they basically allow you to do fractional ownership. So think of it this way. They go out and they say, hey, we found this home. We're going to buy it as an investment property. Do you want in? And I can put in $100. I can put in $50,000 or whatever I want. And then I will own whatever portion of that house that it gets in terms of whether it's success or not a success. So if the rents are good and it makes money and appreciation and they sell it 2 years from now, I get whatever percentage my money was that went into it. So I thought it was pretty neat. Kind of takes a lot of it's invested in single family real estate without actually having to have the 20% down, without having to do all the management, things of that nature. So I thought it was pretty interesting. The only catch, I wouldn't say catch. The biggest beef I have with this is they started this basically during COVID. So while they said over $75 million in real estate funded, that's awesome. Good for them. 203 properties. That's awesome. Good for them. For the most part, guys, as you've seen these videos over and over, prices have been going up and up and up. The demand has been, the demand is strong, etc. So I would expect anybody to have success over the last 2 or 3 years of doing this kind of thing. So it'll be interesting to see how this goes moving forward, but I'm certainly intrigued and I just want to share that with you. So I'm not making any endorsement. I just literally got to log in and that's all I've done so far, but it's at least interesting enough to share. I also saw this about the stock market, and last year I was just reading something that as far as like the 60-40 portfolio. So in theory, this is like the perfect ideal scenario for investing. I have different thoughts, but let's just take the 60-40 because it's widely known. What it means is 60% of your money is in stocks and equities, 40% is in bonds. And basically 2022 last year racked up to be the third worst year in all of history with that split, because what's funny is not funny, but what happened last year is obviously the stock market got beat up and the bonds got beat up. That's not normal. Normally when the stock market gets beat up, the money will come out of stocks, go into the bonds, which helps things out and makes them do better. But last year was just that double whammy, somewhat having to do with the Fed, the market, all that fun stuff. So I just thought that was really interesting. And then on the same slide, because it had the room for it, the National Home Builder Association, look at their traffic. And you can see the little blue as far as like recessions that come in. And you can see how when there's precipitous drops like that, recessions typically follow. And obviously the one for 2020 didn't count. I mean, it counts, but it's COVID. So we understand why. But check out the home builders traffic. So we have seen a ton, and I know for you home builders watching this, we've seen a ton of activities, even realtors, ton of activity the last couple of weeks here in January and the first part of February. So traffic has picked up. That is wonderful, but that recession is somewhere, looming, and we've been talking about it for a while. So I'm sure it'll be showing up here sometime soon. So long story short, guys, there you go on that. So here's something clients keep asking me, like, hey, they heard, they've seen, yes, this is true, but the Vantage. So for credit scores, guys, there's all different kinds of models. So we do not use I can't speak for every lender out there. To my knowledge, the Vantage score is not being used by mortgage lenders that I know of. Let's qualify that. But the Vantage score, and maybe it trends in the right direction and can show some proof and science behind. Maybe it can come to the housing model. But basically, they're going to remove all medical debt from their scoring model. So I think that's a big bonus, because I've had a $78 collection from my dentist of 14 years show up without me knowing. Called them up and they're like, oh, our bad. Must have been some with insurance. So I understand that's the case. I also know friends and family and clients as well that have had medical issues, whether it's them, their kids, and that is certainly not something they would wish or wanted. And with the whole system and just how expensive it is, I don't think medical is technically indicative of your ability to pay or repay a bill. So I'm pro this. I don't know that it'll come through the mortgage side anytime soon, but I'm just throwing it out there. Lastly, saw this, J-Lo, $42 million for her 8-acre estate. There's a link down here. If you guys want to check it out, feel free to do so. But I was like, geez Louise, like, I don't know how much money somebody has to, and I know how much Jennifer has. She and Ben, what do they call them? I don't know, it's not BLO, but you guys know Anyway, it doesn't matter. So all this to say, she and Ben have lived in a $42 million 8-acre mansion in Los Angeles. It is up for sale. So maybe if anybody out there interested, you want to pull your money together, maybe we can all go buy it and do the fractional sharing like the other thing we just saw at the beginning. So who knows? There you go, guys. With all that to be said, as always, thank you for watching. Let us know if you have questions. We're around this weekend if you need quick pre-quals. And as always, guys, when you think mortgage, think more. Bye.